Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And don't forget that this week is a Diwali special week. And throughout the week, we're going to be getting you the top recommendations from our experts as well. So do wait for that. But before that, let's have a look at what the markets are up to. So Cheryl, quite not such a great action on the benchmark indices, but a lot of stock-specific action.
Yes, absolutely. It's earnings season, Shrishti, isn't it? It's a lot of stock-specific action. A very good morning to you. And if you look at the markets, like Shrishti said, that the benchmark indices are actually doing nothing in trade today. Muted moves coming in for both Sensex as well as Nifty. Is the Nifty Bank that's once again underperforming the benchmark indices. 0.2% downtick coming in for Nifty Bank. If you look at the advanced decline ratio, for now it's heartening to know that the favor is still in the it's actually still in the favor of the gainers as of now, but just initial hours of the trading session. Let's see how that transpires as time goes by. If you look at the top gainer on the Nifty, it's a surprise actually. It's BPCL that is among the top gainers on the Nifty, is seeing gains in excess of 3% as we speak, followed by Adani Ports, Cipla, Dr. Reddy's. Asian Paints are other set of gainers in trade today. While on the losing edge, it is ICICI Bank that's the top loser on the Nifty. 1.2% downtick coming in for ICICI Bank. NTPC, Bajaj Finance, HDFC Life, Tata Steel are some set of other losers at this point in time. Talking about the sectoral indices then, it is the bank index that is in the negative territory. Apart from that, none of the other sectors are in the negative territory. Pharma index once again ruling the charts, 1.8% uptick coming for pharma. Realty, oil and gas are the other set of gainers, and broader markets as always outperforming the benchmark indices. So Shrishti, that's the way how the markets are looking like at this point in time.
Okay, but moving on, and since we talked about the top recommendations from our experts, so let's go across to them and find out that which stocks are in their list. And with this, let me welcome on board Kunal Bothra onto the technical side, as well as Shahina Mukaddam also joining us. A very good morning to both of you. And Kunal, coming to you to know your top recommendations, like we have been getting in the three stocks in three different categories, that is safe sparklers, high risk rockets, as well as for value investing. We have categorized it as value bombs. So go ahead, tell us, where are you looking at?
Good morning, Srishti. Good morning, everyone. The three stocks which I would recommend into these individual baskets. One, of course, from the safe sparklers, I believe that the defense pack looks very attractive. HAL, Hindustan Aeronautics, is something which even on the short-term charts looks very, very strong. The stock has made a comeback, almost a V-shaped recovery for the stock in the recent time frame. The last one and a half odd year has been more like a dream run for many of these defense names. So would be bullish on HAL and expecting that this stock would continue to lead from the front for the entire sector from current levels. Now from the high risk rockets, I would probably believe that GMDC, a stock which had done exceptionally well, I think in the mid part of 2023, from I think sub 200 levels to 350, 400 plus mark, the stock had hit. From there on, the stock has gone through a correction. It's closer to 325, 330 levels. So I believe that at current juncture, it could be a very attractive buy. The risk reward being in favor, the stock completing a major retracement towards its 200-day moving average. So that also looks very attractive. And from a high risk basket specifically, I would believe that the stock holds potential to at least retest the previous highs and cross beyond those levels. In terms of the value bomb, JSW Energy, a stock which had done exceptionally well in from the 2020 lows. Somewhere in the last 1 or 2 years, the stock has seen a bit of a staggered kind of a performance. But I think at the sub 400 levels, where JSW Energy is trading, looks very attractive and would expect a very strong upside for the stock, possibly in the next 1 to 2 years.
All right, so those are the top picks coming in from Kunal today. Remember, Kunal has actually, this is the third day in a row that Kunal has given his picks for us. And today's Kunal's picks in the safe sparklers is HAL, in high risk rockets is GMDC, and value bomb is JSW Energy. Good morning to you, Kunal. And good morning to you as well, Shahina Mukaddam. Thank you so much for joining us on the show, and also sharing your top Diwali bets with all of our viewers. This time we've actually tried to add a twist to it so that fundamentally you will be able to explain better in which stock fits the safe sparkler category, which one do you think that has the highest value in it and that will be a value bomb for someone in their portfolio, and which is the one that is a high risk rocket according to you.
Okay, so I'll happy Diwali in advance and safe bursting crackers. At the same time, let me start. ITC would be my safe sparkler. So I've been recommending this for some time, but I continue to recommend it as a safe investment bet for the medium to longer term. It may not remain in the same format as ITC, but if you invest in it as of now, you're getting it at a slightly lower price than you had it earlier because of the consolidation in numbers. The numbers for the second quarter were not that sparkling, let me put it like that. But I think M&A activity is going to give you a good investment return. You have hotels that is first on the line. Of course, if you continue holding ITC, you will have your investments in FMCG, agri business, as well as cigarettes, which remains to be their cash cow. Valuations, despite having the stock having run up so much, is still about 24 times 1 year forward, which I think remains very interesting in the FMCG bet, as well as in the category in which the company is currently there. So that would be my safe sparkler. The second one would be my risky bet. Risky bet I would put as Z Entertainment. The only reason I'm putting it as risky is because it's like been, intrigued in so many controversies, as well as you have had the cases. Finally, we have NCLT that has given the approval for the merger with Sony. Of course, now Sony is the Indian arm is called Kalver Max. So I think that is a very big positive. Also, I think in terms of the management continuing as is another positive. Given that the numbers we saw in the first quarter were pretty depressing, but and the numbers for second quarter are expected on Monday. So I think at any dips, this could be a good investment for the medium to longer term. It offers good value in terms of return on the current price if you're holding it for the medium to longer term. So it is slightly risky, so I would put it as my risky bet. And the final is Arbindo Pharma, which I will put as my value bomb. I mean, already today it's run up, when I was thinking about it. But at the same time, I think when at current levels, valuation in the pharma overall sector for Arbindo still looks attractive. It is about 24 times 1 year forward. But also there is this, the value unlocking that is potential possible in the medium term, because they have put their US injectables arm on the block, which could get them about $2.5 billion, which actually could start making the valuation look extremely attractive if that were to go through. Even having said that, Arbindo being the second largest in terms of consolidated revenues in the Indian market, as well as the specialty products, injectables that are getting approvals in the US, where, I think international markets contribute 90% of their revenues. So I think it is a very important market, and I think pharma as a sector overall is also starting to attract investors. So I think it will remain a value bomb despite the doubling of the stock in the last 1 year. I think there is an opportunity for the stock to give good returns in the medium to longer term also. And I would like to add that I hold all the three for quite some time. So that would be my disclosure.
So there you go. Those are the top recommendations from Shahina, as well as the disclaimer. So on the safe sparkler, that's ITC. Risky bet is Z Entertainment, and Aurobindo Pharma as a value bomb for a long-term investing. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. As we come right back, it's time to take all your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get your answers for all of your stock related query. Viewers, you know the drill. You need to write to us on the WhatsApp number that's flashing on your screen and ask us or send us your query that you have with regards to stocks. But due to it being earnings season and we have paucity of time, let me kickstart with the earnings and take I beg your pardon. Let me kickstart with taking your queries and take as many as possible. The first query is coming to you, Shahina. And this one is coming in from Murthy. He's writing to us from Sikandrabad. And he wants to know the long-term growth prospects coming in for Abbott India. And also he wants to know what sort of a price would be a good price for him to enter this particular counter. And apart from Abbott India, Nestle India is the other counter also that he's looking to invest in the long term. And is the price right now for him, Shaina?
Yeah, I think both these stocks look interesting and attractive for the medium to long-term investor. Abbott India looks good but even at current levels, I would say if he can get in, closer to the 22,000 levels, then he can get a decent return, because we could see a target of close to about something like 24,500. So that would give him a decent return. But these are slow moving stocks. I mean, you cannot expect, a very strong return in a shorter period of time. But medium to long term, they're strong candidates for being in your portfolio. Same goes with Nestle. I think valuations are expensive, but over a medium to longer term, if he gets in at current levels or at dips, then he can get a decent return.
Okay, moving on then, and Kunal, coming to you for the first query. This one is from Anu from Gurgaon. She's holding 100 shares of Deepak Nitrite, but her buying price is 2,166 rupees. The stock is seeing good moves in the past couple of weeks. How do you see this? Should she continue to hold on?
Deepak Nitrite, I think, is a very good stock. In fact, chart, I believe that it's one of the better names from the entire specialty chemicals spaces. In fact, the best way to try and judge is that at a point when many of these specialty chemical names, had fallen significantly below their long-term averages, Deepak Nitrite in the last, 4-5 months, 6 months of this price correction for the sector, I think just managed to hold very close towards its 200 DMA. Yes, there were, few breaks in between, but then when you look at the significant price damage, that was not seen for the stock price. And the first sign of recovery for the chemical names, this stock has also managed to, show a recovery of more than 5 to 7% so far from its previous swing lows. So I believe it's a strong stock. You should continue to hold on. If possible, as I said, closer to 200 DMA, which I think is at current levels is around 2000 mark, should be a good point where you can look to average further.
All right, Kunal, coming to you once again. This one is from George. He has 300 shares of Wellspun Corp that he's bought at an average price of 224 rupees per share. He's he's asking whether now is the right time to exit the counter, or should he hold for some more time. He's making hefty profit on his holdings in Wellspun Corp. What should his strategy be now?
See, I think as of now, you can continue to hold on. I was just looking at the charts in terms of the indicators, whether on the monthly basis, on the quarterly basis, whether the stock has entered into overbought nature. It's not, seen as of now, even though with the last 3 quarters been successively positive for the stock price, moving up from 200 to now 460 plus. The RSI on the monthly charts is around 79, 77 mark so far for the stock, which means that there could be more room on the upside. We've seen that whenever the RSI jumps from 79 to 81, 85 plus mark, the price appreciation is very high in that kind of a zone. So I believe that you should hold on to it for at least another quarter and wait out for the indicators to come into an overbought territory before you were looking to book profits into the stock.
Okay, moving on then, and Shahina, the next query is from Ramamurthy from Bahrain, and his query is this a good time to buy NMDC or JSW Energy with a 1-year investment horizon?
I would prefer JSW Energy over NMDC there, because I think numbers have started looking pretty good, and it gives you an opportunity to enter. NMDC could see some issue because the price of metals is coming off, but I think if you look at it at dips, then it does look like an interesting bet, but not at current levels.
All right, this one is coming in from Ghosh Dada, and Ghosh Dada has actually mentioned, Kunal, that we all call him Ghosh Dada, but his real name is Subrata Ghosh, and he's 74 years old and he's been in the market for the last 24 years. And today he's given, he's actually asked you a suggestion. His recommendations for Diwali are CG Power, Gen Irrigation and L&T. Do you think that he should look at staggering, going ahead and do his staggered buying strategy with these counters, or which one do you think are the best fit in his portfolio? Do you think Gen Irrigation makes sense to be in a portfolio?
So I think both CG Power and Gen Irrigation could be tricky bets. Gen Irrigation, of course, the stock being extremely volatile, and we've seen the history of the stock over the last decade and more. I would suggest that it should not be part of your core portfolio as such. The reason why I would probably also omit CG Power is because the stock has run up exceedingly high in the last, I think 2020 lows for the stock for CG Power, if I'm not wrong, was around 5 or 6 rupees, and the stock in the last month or so made a high of 450. So which means you've already seen the stock moving up not just 10x but more than I think 70, 80, 90x from those levels. Now, you can't expect similar kind of a price appreciation in a short span for such kind of stocks. They are bound to go into a time-wise consolidation or a price correction as well in between. So I believe that it's better to try and wait out for the stock, let the corrective wave play out. Maybe it could take another 6 months to 1 year at least for the stock to complete that corrective wave. So I would omit that. L&T could be a good bet.
Okay, Kunal, once again a query for you. This one is from Nagesh from Bangalore, and he has actually bought two put options. Firstly is on Hind Petro. He has bought 300 rupees put option for the November month, as well as Trent, another stock which is showing great moves. He has entered in a put of 2480 rupees. The stocks are doing great, but any signs of reversal do you believe that these stocks could show, and what will be your advice for him?
So I think I'm not sure when you've bought and what are the current prices for the put options, but it doesn't make sense to just go for a contra because these stocks have rallied up higher. We've seen that the markets typically gets into an irrational move in terms of stocks, and you're left stranded in terms of a negative opinion or negative view into these names. Wait out for a point when these stocks they start to get into a correction. Ideally, what happens is that after such a kind of a steep rally, these stocks, they give you very less amount of correction. So for example, if the stocks move up by a magnitude of 15% to 20%, then you expect that these stocks may just give you a correction of 4-5% odd before they retest their previous highs. So a time-wise consolidation is something which you should watch out for if you want to initiate a fresh put option. I think at current levels, I think you should look to square off. Again, I'm not sure what's your buy price and the current price for these options.
All right, the next query that I have is coming from Sudhir. He's writing to us from Kochi, and this one's to you, Shahina. He wants to know whether it's the right time to enter Apar Industries. He wants to enter the stock with a time horizon about 1 to 3 years. Do you think it's advisable that he looks at this counter right now? The stock is trading at around 5,100 odd levels.
Well, I'm so I will give this a pass.
Any views on this one? Do you think now this price is the right price to buy Apar Industries, even if it's for the time horizon of 1 year or 2 year?
Well, I would suggest to wait out for some more time. The stock has just started to show signs of correction. It's trading below the 50-day moving average, something which the stock had not seen, I think, in the last 6-8 months or so, which means that it could probably be a starting phase of a correction for Apar Industries. The stock may look to come back towards its 200 DMA, and if that happens, and given the time-wise analysis, I would probably expect the stock to maybe even come back towards 4,200 odd levels. So I would suggest to wait out, let this entire corrective wave play out for Apar Industries. I think it's going to take some time, maybe another couple of quarters, if I'm not wrong, for the stock to come back towards its 200-day moving average.
Okay, Shahina, coming to you for the next one. This one is from Janvi from Bangalore, and she has bought Arti Drugs, but his buying price is around 900 rupees. This was during COVID that she entered this particular name, wherein all the Arti group of stocks were doing great. But at this point in time, is this a time to actually book her loss, or should she continue to hold on? What's the way forward as per you for Arti Drugs?
Exit Arti Drugs, there are better opportunities in the overall pharma sector as we just discussed. So I would exit. She can shift to Aurobindo, she can switch to Dr. Reddy's, Cipla. There are a lot of other alternates.
Shaina, another one coming your way from Muni Rajulu. He's writing to us from Andhra Pradesh, and he wants to know whether it's a good time to enter Talbros Auto as well as Birla Soft. He wants to enter these counters with a time horizon about 5 years. Do you think it's advisable right now to enter these counters, or do you have some other strategy in mind?
Yeah, he can enter both the stocks. Birla Soft has come out with excellent numbers, and I think going forward also the growth is likely to be good and performance will continue. And Talbros Auto also is one of the decent picks in the auto ancillary segment. You can pick it up even at current levels.
Any of the liquor stocks that you like at this point in time? Padma wants to invest in any of the liquor names like Som Distilleries, Radico Khaitan, USL. Good time to enter for the next 6 to 12 months.
Yeah, Radico is something which I highlighted, I think, yesterday and today morning. Looks attractive as a short-term trade if you're looking at it as a short-term kind of a view. I think the stock has now come back towards 1400 mark. It was yesterday at around 1360 odd levels. I would look out for now a revised target, say closer to 1480, 1500 for Radico. So, but that would probably require a bit more longish time frame. So you can continue to stay bullish over here. United Spirits also could be a good bet, but the only catch with the stock is the sudden knee-jerk price action on the downside. So when it comes closer to a breakout, all of a sudden the stock gets into a reversal. So it's better to try and buy the stock on a corrective phase. I think 1040-50 could be a good point to buy United Spirits.
All right, this one is coming from Dr. Ravi and he wants to know, Kunal, makes sense to buy Indian hotels at the current price for a period of 1 year. Do you think now is the right time to buy Indian hotels, or do you think that Dr. Ravi should actually wait for the right price to occur?
Well, of course, the right price for Indian hotels would be when these stocks come closer to their major retracement points. I think, if I'm not wrong, last month or so, the stock had come back towards a good retracement, retracing from 436 to I think around 370, 75. The stock had hit a low, so it was around 10%, 12% kind of a correction for Indian hotels in that sense. So those are good classic entry points. You can start at current levels, but I would believe that the second tranche of quantity which you should buy should be closer to this 200 DMA or maybe around the 370 mark. If you're looking at maybe adding to another hotel names, I would suggest Oriental Hotel as well as EIH Hotels. These two are the other names which also on the short-term charts look attractive.
Okay, so that's the take on the hotel counters. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Now a show where we get you answers for all your stock related queries, and today onto the show we have Kunal Bothra as well as Shahina Mukaddam with us. And continuing with the same, Shahina, coming to you to know your take on Biocon, because you were just highlighting some of the pharma names that you like at this point in time. Nilini from Patiala actually wants to know, is this a right time to enter Biocon with a 1-year investment horizon? What will be your view?
No, I would prefer that she waits. So this is not the right time in my view to buy Biocon. They are going through some issues in terms of their plants, etc. and approvals. So she can wait. I think there will be some time in future when she can look at it.
So wait for some more clarity from the management. But moving on, and Kunal, Srinath wants to know, in the current rally, can he enter Suzlon Energy? Is this a right time to enter this particular name?
Well, it's been one of the more trickier names. The stock has done exceptionally well. We of course understand that it's a high beta stock, and I think it's now almost at 37, 30, 38, 39 plus mark. So high beta name. What you can ideally do in this kind of a scenario is keep the position size a bit more lower, because in case if the market gets into any kind of a corrective wave, or if the mid caps and these small cap names, if they start to get into a correction, there could be a higher possibility that these stocks may correct a lot more sharper than what we've seen in terms of the rally for these stocks. So buy in very small quantities at current levels, and in case if there is any kind of a major correction like a 20%, 30% correction, you can consider to add further.
Okay, Shahina, we did touch upon Arti Drugs, but Shayak from Bangalore is holding 200 shares of Arti Industries from a price of 801 rupees. And recently, post the earnings, even Morgan Stanley note gave some boost to the counter. Shayak wants to know, is this a good time to hold or average this particular name? So this is the first query, and he also has a question on Forbes Gokak. I'm not sure whether you tracked this one or not, but he says that he's holding 100 shares at a price of 923.
No, I'm not holding. I don't have any reco on Force Gokak, but on Arti Industries, I think he can buy at dips, not at current levels, and then hold for the medium to longer term. The stock has corrected, so that does give an opportunity, but I think there are slightly lower levels that still are to be seen.
Okay, so that's the take on Arti Industries But Kunal, Subramaniam from Chennai has both IDFC as well as IDFC First Bank shares. Can he shift to any one of these names? If so, then which side he should make a shift in expectation of good returns?
So I think both these stocks, of course, would move in tandem. IDFC Limited, I think, has been slightly higher in terms of the returns, but I'm not too sure that which is the exact stock which can give you a slightly higher degree of return. My sense is that this is the first week where the correction has halted for these stocks. We may have to wait for maybe another week or so for these stocks to really show signs of bottoming out. If that happens, maybe you can look to even add further quantity for both of these names. But at least as of now, I would suggest to wait out for at least another week. Let the prices stabilize. Let this 80 odd support for IDFC First Bank, for example, act as a formidable support. If that happens, we could see a decisive breakout on the upside. But then for that, I think wait out for maybe another week or so.
Kunal, one more banking query. This one is from a short-term investor named B. Santosh from Hyderabad. He's holding the script of Kodak Mahindra Bank. His buying price is 1824 rupees. Should he continue to hold on?
See, I would suggest, of course, to hold on to the stock. Now, there is a phase in the market where large cap stocks would underperform, mid caps and small caps would look very attractive and lucrative. We are into that phase. I think in the last 4-5 months, we have been into that phase. But then we've seen historically, whether it's in 2010, 2020 odd, that these large cap stocks have a tendency that whenever these stocks make a comeback, these stocks provide exceptional returns from a portfolio perspective. So I'm not sure what's the entire tilt of your portfolio, the risk reward, the risk appetite which you have, as well as the time frame which you're looking out for. But I think Kotak Bank has to be one of the stocks which you should hold on to it from long-term play.
Okay, and Shahina taking the next query from Chandrasekharan, and he's holding 65 shares of Apollo Hospitals from a price of 4,950 rupees. Results definitely due, but a good time to book out profits in this one and rather make a switch to Dr. Reddy's lab at this point in time, or should he continue holding Apollo Hospitals for further more upside?
I think he can continue holding Apollo Hospitals. Both look good, of course. Even Dr. Reddy, he can look to add. But Apollo Hospitals looks good at current levels, and so it's a hold.
Okay, that's a hold coming in on Apollo Hospitals, although Dr. Reddy's also look good. But with this, viewers, it's time's up for today's edition of Buy Now Sell Now. Thank you so much, Kunal, as well as Shahina, for joining us today and helping all our viewers with their stock-related queries. But viewers, as we go, we are leaving you with a special Diwali programming for Samvat 2080. So stay tuned for that.
We've seen the premiumization trend play out within autos as well, right? And I'm purely going to talk about the passenger vehicle market here, because you're seeing even the likes of Maruti and Tata Motors offering newer models within the slightly upper end segment, as opposed to the completely affordable passenger cars that they earlier had. You think this is a trend which one can still catch on to?
Yes, I do think it's a trend. And as a consumer, if I was to question, would I do it? The answer is yes. And there are many reasons for this. First of all, the time being spent in the cars is increasing. And which therefore means that when you're spending more time on the road, you would be inclined towards luxury. And some of these cars have graduated away from being basic cars into more luxurious models, whether they are in the form of leather or Napa seats, or they're in the form of the entertainment systems that they carry, or even in terms of ambient lighting and other features. The second is the human desire for safety, because now all lives are becoming more and more precious, particularly with the onset of the kind of problems that are happening all around the world and the kind of misery that it carries. People want to leave all that baggage behind and be more secure within their own setup. So these new level cars come with a lot of safety. They cut out a lot of noise. We are overexposed to noise pollution all around. Right now, for example, with the air quality concerns, if now a car comes and says that our air quality is, in double digits as opposed to the high three digits that Delhi and Mumbai experiences, then people will say, I'll attach that as a premium factor. So these technology companies, and Mercedes being one of them, since you referred to Mercedes, are all moving towards enhanced customer experience between all these factors and creating more and more desire. Similarly, there's a desire for, as an example, for luxury SUVs, because a luxury SUV gives you the feeling of being in control. And in a world that is so turbulent, people like to be in that feeling of control. So it's a very different mindset game.
Absolutely. But, since you talked about tech-enabled cars and all the features that you highlighted, which is a very interesting line of thought, by the way, is a better way to play this premiumization within the auto segments via pure play auto companies, or do you think it is via auto anchors?
Well, I would say there are three ways to play it. One is by the auto companies itself, and where you find that the auto companies have leadership status and they're sort of evolving towards the interest of the demand side, then they are obviously well equipped. The auto ancillaries have a different benefit, which is the fact that they may be catering to multiple companies in the sector, and to that extent, they don't have to be competing because they may be supplying to multiple companies. They also have the element of a very large after-sales market that has not been, technically converted into an original OEM, because a lot of people historically have just gone and replaced parts without looking at whether it was an OEM or not. And now safety becomes a very critical feature. And with expensive cars and insurances, you also have a sort of a requirement to ensure that your car does not breach the warranties and other terms. And the third way of playing the sector is IT-enabled companies that are allowing these cars to go the technology way. And therefore, you sort of bet on all the three of them.
Safir, I don't know about yours, but my home is definitely waiting for an upgrade. But you think that's another theme that one could look at?
No, definitely it is. And, once you start experiencing it, you want to then move on to the next. So while you're giving an example of a button that would, for example, work your curtains or things of that sort, I think we are on the onset of the entire machine learning and artificial intelligence. And a lot of these technologies will become voice prompted. So it's just like what happened with Siri and Amazon and other things. And it's happening in cars. I mean, you spoke about Mercedes, and Mercedes has a beautiful feature called Hey Mercedes, where the car enables a lot of actions without your requiring to press buttons. So there will be a movement towards more luxury, which is voice enabled. Then there will be haptic technologies, which is fingerprinting. And you'll say that, certain parts which are to do with securities, for example, door locks and many other things will work on haptic technologies. And then there will be a new feeler, which is to do with this entire ambient system and how you can transform your house without needing to change the lights. So there will be companies that adapt to that. Already the LED technology did very well. Now there will be other beneficiaries. For example, I always say that no matter whatever automation you talk about in the homes, there'll be a huge segment for wires and cables, because you will also have to take on loads, you'll have to take on safety, you'll have to take on special gadgets that require these circuit boards and ICs. So many other things. So there's a whole, which is benefits electronics. So there's a whole segment there that is going through transformation, not just the obvious names of furniture and, tiles and other things.
Seen across the board, I mean, not just in Delhi, but in Mumbai as well, how some of these premium properties have been selling like hotcakes within days of their official launches. And that's pretty much played out with the real estate index as well, with it sitting at a life high right now. Each and every constituent of the Nifty Realty Index has performed just so well. You think this also is a theme which is here to stay?
Well, personally, I do think that it is a theme that was there to stay at least for a few years. Because there's initially, when you would buy a house, you would buy it for your own convenience and your own comfort and maybe family security. But the paradigm of valuation has changed because now you have a social liking. And the reason why people are going on these travel and they're buying better homes is also because now they put it up on social media and they get the liking of all their friends and relatives and, even strangers. And that is giving a lot of kick to people. So more and more people are elaborating on what they eat, how they dress up, what kind of flower arrangements they make, what kind of flights they take, etc. And therefore, there's that desire where everybody is becoming a social media hero in their own worlds.
The future of finance, or when it comes to banking, is fintech. So I'm very positive on Paytm as a company, because I think fintech is at the intersection of finance and technology. And my view, probably some of these fintech companies will emerge as the fastest growing companies within the financial sector for this decade. So clearly, I like that. And now the companies turn profitable, and probably they're going to have very strong growth over the next, let's say, 2 to 3 years. And I think valuations still are very reasonable. So in the context of the near-term growth over the next couple of years, and more importantly, the opportunities that lie for the company from a medium-term perspective, I think it becomes a very compelling bet for me.
So not just for 1 year, but you're saying it's a long-term bet as well that one can hold for the next 3 to 5 years?
Absolutely.
Long-term bet. But, there's one more, new age tech, and Vineet, you also have picked up Zomato, right? So what's your view on Zomato? Similar to what Pankaj is saying as well, this new age tech space, how are you seeing that grow as well? And
So,
Zomato specifically?
I will definitely second his views, but I'd like to add one short-term trigger to it, is that coming off of the interest rates. So from 5% international treasuries, we are down to 4.5. And every time whenever the interest rates come off, okay, when the yields come off, the new age stocks fly out. And Zomato has a well established business model. Any existing competition that was coming through is not there. Dunzo has fallen off, so the Reliance weight, what if they enter the segment, how it would do, is no more a challenge to Blinkit. Blinkit has broken even, and Zomato and Swiggy are in a veritable duopoly business, growing very well. Profitability is established, and there's a long runway ahead of compounding growth. So I believe the stock should do well in the next 3 to 5 years.
Okay, another 3 to 5 year bet coming in. Those are the new age verticals, but then there is some old school traditional sectors, infrastructure, etc., which are also doing well, Dipan, and that's the case. I guess you're picking up VATech, Babak?
Yes, absolutely. I think along with new age tech, environment is very important, and we are all seeing the air in Mumbai and elsewhere, and water is a big issue globally. So VATech is a water technology company, and it operates globally across the world, especially Europe, India, Middle East as well. And their main expertise in setting up desalination plants. In fact, Chennai, which is the desalination capital of India, 70% of the water comes from desalination plants, all of which have been set up by VATech Babak. Anyway, we are in a capex upcycle, and we're entering into election season as well. So I expect that infrastructure projects will get even further impetus, and VATech Babak is bang in the middle of this particular theme, where water is important and we want to spend more on infrastructure. They have an average 3 to 4 year kind of order book position, and I think that next 2-3 years will be exceptionally good for VATech Babak. But just to caution investors that being a kind of EPC company, there can always be volatility in earnings, because project completion is when do they kind of recognize the revenue, and that may fluctuate from quarter to quarter. But the next 2-3 years are exceptionally good for this company, and valuations wise also it is quite reasonable.
Reasonable valuation wise as well, and attractive, when that order book actually comes in, that is a play that would work out well for them as well. Pankaj, you've picked out PNB Housing Finance. When I look at the charts, already in the last 6 months, we've seen a good move already come in for the stock. How attractive is the bet, maybe for a 1 year, 2 year period? What is the time frame that you would be looking at for PNB Housing? What are the triggers that you are seeing for this one?
Well, I think housing finance is a secular growth story in India, because we still have 30% of Indians who still don't own their homes. So obviously, as India grows, all of these people would want to buy their home, and they will take a mortgage loans, because 90% of home buying is done through a mortgage, which effectively means for the sector as a whole, there's a huge opportunity. PNB Housing Finance as a company has undergone some change in management and business strategy. They're coming out of a deep consolidation in their business, where the last 3 years they did not grow their business. But now with the new management and the new strategy in place, they've started growing their business again. I think the change in management has been very inspiring, because the new CEO comes with a fairly good track record. And I think while the stock has done pretty well over the last 6 months or a year, but it's still early days. I think from a valuation perspective, the stock still trades at considerable discount to peers in the sector. And I think as they deliver numbers over the next few quarters, I think probably the street will gain confidence. And I certainly think that so clearly there is earning